Good morning, traders, and welcome to the market forecast. I think it's Wednesday, November the 18th. I know we're about midweek here. I know that. I'm John Hoagland. As always, thanks for trusting me with your time. Good morning. Good morning. I want to echo Murph's sentiments this morning. It's great to be alive, and isn't it so? I see we have our storm goer here. Looks like Kevin is here. Good to see that you're here. Hopefully, things are going well for you. As always, we're going to look at these markets in context through the lens of risk management. We've got a lot going on, some interesting opportunities for us already this morning. If you've been active in the markets this morning, gold and the crude oil have offered some decent kind of smaller opportunities this morning. We're going to take a look at those on the charts here very shortly. As far as eco numbers this morning, 7:30, the housing starts and permits came out. A little bit of a mixed bag in that regard. Just going to take a quick look here. And the building permits was a miss. Housing starts was bigger than expected. There was also a revision to last month's housing starts, which was an upward revision. So mixed numbers, possibly good numbers. Who knows? We're gonna have to see how these markets respond to that. 9 o'clock Central Time today. The ECB President Lagarde is speaking. There's a bunch of talking Feds here in the U.S. talking throughout the day, and of course we are awaiting our EIA petroleum status report due out at 9:30 Central Time. As far as other news is concerned, I'm sure we're all well informed that the equities have moved back to the upside, set to open higher as investors continue to wrestle with good news of vaccines, bad news of surging infections, questions as to when and if there's going to be any kind of stimulus coming down the pipe. So lots of looming eco-social questions going on. Headline risk, as if we have to continue to mention, is always present. It's a high probability. I'm calling today a high probability headline risk day. Some good news, some bad news. We don't know when it's going to come out. We're sure there's something going to come out just about any time. So we're always prepared. Make sure you're using your stops. As far as retail, yesterday we had some questionable retail numbers. This morning we've had Target and Lowe's and TJX all beating expectations. So again, conflicting information, something that we are always wrestling with, that cognitive dissonance of trading what we see versus what we think. Always interesting. Crude prices back to the upside this morning, at least initially. OPEC was quiet on output plans yesterday. Investors and traders thinking that may keep them from speeding up any production increases into next year. The API last night announced a 4 million barrel boost in crude stocks here in the U.S. The EIA is expecting a smaller number of 1.6 million barrel boost in crude stocks today. And again, 9:30 Central. Make sure you like, share, comment, question, feedback, heckling, and subscribe to our YouTube channel. VIX this morning down about 3%, 21.96 last I checked. Dollar index just about flat at 92.44. Let's take a look and see who we have with us today. Good morning, Felix. You win the prize. First one in the room. Excellent sentiment there, Murph. It's great to be alive, of course. The holiday packages are out. There's the link to check out the holiday packages. Good morning, Tanya. Danielle, awesome PMA. Yes, Murph. Danielle, guten Tag to you. Today is market therapy as well, if you have the time. If you have questions for the good Dr. Menaker, make sure you sign up. Come to the session, 3:15 after the markets are closed. We should be able to relax and listen to the good doctor. Is always very calming to me when I hear him speaking. And you can bring your questions. If by chance we don't get to your questions, we're doing it again in 2 weeks. Bring your questions, put them in early, and we'll get to as many as we can. If we miss you, sorry, but we are going to probably be continuing to do these hopefully into next year. Looking forward to it. So good. Good morning, Clarence. Good morning, Joshua. Brian. Hey, Brian. Rational Investors here. Um, I'm not sure. Are you talking about the TST beach balls that we had out a number of years ago? I know, Brian, you've been around for a long time. I'm not sure if that's the beach balls you're talking about. Kevin, good morning again to see you. And does anyone have the high number for the ES number for weekly kickoff high? Yes, 35.75. 35.75. Looks like it was a tight range for the weekly kickoff in the S&Ps, and it was by design. We were looking for a move away from that level relatively early, and it may come into play today. Might be interesting. We're going to take a look at that again shortly here, Mister. No, we have internet. Kevin says no cell phone service. Well, just stay safe, Kevin. We want you around for a long, long time. Oh, all right, excellent. Thank you, Andre. MSS Capital, Tanya. Thanks for putting in those weekly kickoff levels there. Are we going to make Bitcoin futures tradable soon? It's always on the mind. It's an expensive product. The margins are big. The risks are big. It's a big tick. Always something that we're thinking about and looking into, though. Danielle, John, good to see you. Mike, good to see you. Gino, Laura, Mike Hang, good to see you. Roman, Mahasik, good to see you. Rob T, Troy, Kevin, Oliver, Vast West, Kevin Scott. You're in a beautiful area. You've just been getting whacked with storms, and again, we pray for everybody's safety, of course, and yours especially, Kevin, Esteban, Nickmo, Alan, Angelina. Hey, John, is there a public YouTube link for the Dr. Menaker presentation you guys did a week or two ago? Would love to share it with my community if public. If it is not public yet, it will be probably today. I'm going to make sure it's there's a little bit of editing that goes into that, but I'm going to make sure that it gets up there today. And that's the Top Step Squawk Radio videos. Let me see if I can. If we don't run out of time, I'll put the URL to join that YouTube channel. Here we go. And I'm going to get it in here. Here is the YouTube channel that it will be on. We're going to make sure that we get it up there shortly. Okay. Thank you, Rational Investor Brian. ES yesterday short for six. You were able to take the ES yesterday from yesterday's high short for 6 points. Tanya, we were talking in our meeting, and I was really just trying to stay patient, looking for an opportunity to look for a decent short in the S&Ps yesterday. It wasn't until 1:30, 2 o'clock, where I started to kind of feel as though that energy to the upside was falling off. I did catch part of that move to the downside that I'm pretty sure you're discussing right here, and that's a really good job. It probably took a lot of patience for you to look for and wait for that short. Nice job. Roman, what is the price? What is the price to be first on chat? Oh, Roman, it's more of a joke. I always like to see who's here bright and early first thing in the morning. So I give you a wink and say there's a prize, but no real prize. Just the fact that you get to be here first. Steve, good morning. Esteban, thought about making options on futures. Always something that we are discussing, always something that we are working on. There's a lot of tech involved in introducing a whole new product. Something we are thinking about, something we are always working on, Esteban. Thank you for the question. John, do you use order flow and analysis, day trading, index futures? The only time I'm really looking or focusing on order flow, John, is when I'm in an area that I'm interested in an execution. Order flow for me is something that I look at just really in the dome, particularly in, for example, breakout types of situations. We're moving, we're taking an area of balance and we're leaving that area of balance. I would consider that to be a breakout. I want to see a lot of orders being placed and canceled. I want to see price move, and I don't want price moving against me very much in those types of situations. So order flow is something that, maybe some people can focus on it all day long. It makes me crazy to just sit there and try and decipher order flow in places that I'm not really interested in trading. So focus on that order flow when you are interested in an execution. Okay, good, Roman. Good. Hello, Josiah. I have a few of those prizes. Felix, yeah, Felix gets here pretty early. You got to get here pretty early. Tanya's, said she's logged in 45 minutes early to beat Felix into the room. Well, we appreciate all this participation. We appreciate the questions. We appreciate you being here. It is all for you. We want you to succeed. The entire company is built around helping traders professionalize their passions and to become good, professional, profitable, and hopefully substantially profitable traders. It's a meritocracy. It's all up to you. That's what we're going to be talking about today with Dr. Menaker. We're going to be talking about how the fact that trading, being a meritocracy, is going to affect your psychological activities, your psychology of trading. So it's going to be a really good one. Again, Brian, we're going to put that last one up on YouTube today if it's not up there already. I haven't had the chance to look. But another one today. Brian, send your people and ask questions. That's what it's for. That's what it's for. Okay, enough yammering. We're already 13 minutes into the forecast. We haven't even looked at the charts yet. Let's take a look. As always, I like to start with the daily in crude oil. And here it is. So, we've priced higher on more supply, according to the EIA and the API. It's more of the inactivity of OPEC and the fact that we are possibly, we're getting close to the end of rollover, which may provide more directional opportunity as our longer term traders come back into hedging instead of rolling over. There's about 85,000 contracts left in the December contract. Those are either going to be expired and delivered, or they will be rolled over into future contracts. Overall, we lost 20,000 contracts in open interest yesterday. Again, I'm not that worried about it because it's an effect of rollover. Rollover has a way of skewing volume and skewing open interest. So 42.15 weekly kickoff high is going to be somewhat pivotal this morning. We had a pretty decent early opportunity because we had some really long overnight inventory. We had settlement down here at 41.65. The majority of the activity from the London session on was pretty strikingly moving price higher over time. We had a little bit of a stumble here at weekly kickoff high, was resistant. Now we've broken out above it. Now it appears there may be support. We've just opened up. We're above that level. If we maintain and accept price above that level, I see this market continuing to the upside. We also have gap rules. Okay, we've opened with a gap. If we can't close that gap relatively early, that's going to make us kind of look for opportunities to the long side, and we've got a major inflection level of the weekly kickoff high here, 42.15. So watch yourself. Watch if we spend some time, if we build some volume above that level, if we can't hold below it, that's going to mark acceptance of it, and we may look higher. We do have a considerable amount of overnight long still in this market. If they take this market back and close the gap or take the market back down to settlement, I don't think it's necessarily a game breaker for continuation to the upside. But again, we've got the EIA coming out today, expecting a 1.6 million barrel boost in crude oil. So we are kind of on hold here, maybe a little bit. We want to see what this EIA is. OPEC didn't really give us any hints. So we're up here on the hopes that they're not going to increase production before the beginning of next year. Do we hope, or do we trade close to points of invalidation? This weekly kickoff level can give us that point of invalidation. Watch and see what happens. I almost feel like we should sit and watch this, but we have to move on. Take a look at the E-mini S&Ps now. An increase in 26,000 in open interest yesterday. An increase in 14,000 in open interest on Monday. The market is bringing participation to this new level that we are currently kind of digesting. Here's our previous all-time high. We're holding above it. We have our extended trading hours session all-time high happening in the overnight, or in the morning actually. So that's going to be a tendency not to let that happen. We're probably going to see the all-time high here taken out during a regular trading session. But when? Where are we here? Open interest continues to increase up at these levels. We're just seeing volume kind of maintaining, which is actually pretty good for upside markets. The market is hinging on, is there going to be any bad news? If there is no bad news, this market will continue to grind higher over time. It's just its nature. So the market is really just kind of sitting on pins and needles, waiting for some sort of shoe to fall. And if that shoe doesn't fall, we're just going to continue to move this market higher. Again, the open interest increase, holding volume at this level is encouraging for continuation to the upside. I want to take a look at the 30-minute chart here and see what we're looking at. Settlement, 3606.75. Put that on your charts. We don't really have any overnight inventory. We don't really have, there's no gap that we're going to be opening with. It's going to suggest to me that I want to stay patient. Chris has a question. What does close the gap mean? Okay, here's Friday into Monday. Monday's regular trading hour session opened outside of Friday's regular trading hour session. That created a gap. When we have a gap and we can't close the gap relatively early, so there was a move to the downside on Monday to close the gap, but it was unable to do so, it tells us that there's possibly more buyers in this market and that the market may continue to rotate higher throughout the session. So the market moves down here, takes a look, can't close the gap, rallies, comes down, takes another look, can't close the gap, and finishes the day near its highs. So when we have a gap, we look for the market to be changing direction, if you will, looking for continuation or directional activity. We're going to see another example of this in gold here shortly. So here we are. We're just kind of meandering back towards settlement. I'm going to suggest trying to stay patient in the S&Ps today. We've kind of fallen into range. I'm looking at our overnight high and our overnight low as the extremes of that range. And I'm thinking, as long as we are just still here digesting and waiting for new information, I'm going to be looking to fade those extremes. 35.75, our weekly kickoff high. Maybe an opportunity down there. Maybe our high from yesterday's regular trading hour session or the overnight session from night before last. Interesting areas, but when the market is rotational, we want to avoid the middle in the range in value. We want to look for the extremes. And I'm looking at the weekly kickoff high here as an extreme, and I'm looking at yesterday's regular trading hour session high as an extreme. We may even be looking only at the overnight low and overnight high as the extremes that we might look for today. If we stay in here, our strategy is simple. We sell here, we buy here. We sell here, we buy here. We break out of this, then we're going to be monitoring for new participation, new buyers or new sellers coming into the market. So it's almost like we want to stay in this range, we want to fade the extremes. We break out of this range, we may want to be looking at going with the breakout of the current range that we're in. NASDAQ? Okay, the NASDAQ has some slowing volume against resistance. Okay, weekly kickoff high is above the Nasdaq. The Nasdaq has, had a little trouble keeping up with the S&P. So, the open interest is still coming in, but the direction is a little bit questionable. We had 34 additional yesterday. Monday we added to 2,400. So there's money coming in. Just the direction is questionable. Here's our previous all-time high. We have not yet been able to take out the high of the weekly kickoff high. There's Lacey. Lacey is saying good morning to everybody. So the market is not presenting as strong as the S&P or the Dow, which is unusual because the Nasdaq has been presenting as stronger. The tech sector has been really helping this move to the upside drive. So I'm thinking. I'm looking for some sort of change to occur. Is it going to be this trend line that's going to do that? Is it going to be the weekly kickoff high? Or are we going to fail up here? Are we going to head back to the downside? I'm looking for change because the open interest is increasing. I just don't see what direction it's going to be here just yet. Here's our 30-minute chart. Settlement is here. 11,975 is settlement. It appears as though this market is trying to push to open with a downside gap. If we open with a downside gap and we can't close that gap, that might give me the idea that the change that we're expecting may be to the downside here in the Nasdaq, which is a little bit of a different situation than in the rest of the equities. So there is still some convergence, if you will, in our equities, which I think further helps confuse traders. If you're trading Nasdaq today, trade what you see in the Nasdaq. Don't trade the S&P. The correlation has kind of fallen off. So be careful looking for correlation with the other equities if you're trading the Nasdaq today. And that goes for any of the equities. Depend on the information you're seeing in that. Here's where we're probably going to see our decent gap, perhaps. So gold, it seems to be just kind of waiting to see what equities do. We've got 4 or 5, 6, 7 days here after this move to the downside of virtual balance. We're still bringing open interest into the marketplace. Volume seems to be kind of falling off, which is, typical in a range-bound situation. So as volume slows, open interest still continues to come in. There's change coming, not sure which. There have been many tests of this weekly kickoff low, including Monday, including last night. Excuse me. Take a look at the 30. So here we have an example of a gap. What I'm going to do here is I'm going to put this profile on here at 7:30 so we can see, okay, here's yesterday's regular trading hour range. We had a lot of overnight shorts in this market. We did close with a gap, but the market is attempting to close the gap. If the market can't close this gap relatively early in the session, I think we may see another test of our weekly kickoff level right here within 3 ticks of it last night. We may see another test of that level today if we cannot close the gap. If we close the gap, it's going to change things just a little bit. It's going to be more of a rejection of lower prices if we close the gap. If we can't close the gap, it may be more of an acceptance of lower prices and bring us this test of the weekly kickoff low. So I hope there's a kind of a good example of what it means to have a gap. Typically, there's a simple gap rule. If the market opens with a gap and can't close the gap relatively early, I understand that's a subjective term, you want to trade in the direction of the gap. So even though our early move here is to the upside, if we can't close the gap, there may be a better move to the downside. Be patient, look for good trade locations. Euro. All right, we're going to try and get this done before the equities open. The euro, again, really just kind of range-bound, short time frame controlled, little price movement all week long. There was a boost in open interest of 5,000 contracts yesterday, which is encouraging for potential change, but we are so centrally located between weekly kickoff high and weekly kickoff low. I think it's going to be a little while before we start to bring in any major participants. We do have this previous weekly kickoff level here, 118.93, resistant yesterday, resistant last night. If we break out above that, I think it'll be a pretty quick move to our current weekly kickoff high, which is 119.41. 30-minute chart. And look where we are. Settlement. 1871 and a half ticks. 1.1871 and a half ticks. Right in the middle of value from yesterday. We've got our overnight high. We've got our overnight low, which might be offering some extremes. We have our previous weekly kickoff high that offers a possibility for a cheap trade. But I'm going to suggest when we open and we are inside the value from the previous day, stay patient. Better trade locations may come. Not looking for big opportunities in the euro today. However, the Japanese yen is a different story. We talked last week about this supportive area down here and the fact that we were unable to accept below this trend line and this weekly kickoff level down here was going to possibly bring some directional activity, and it has certainly done so. Okay, so we're seeing that upside continuation off those recent lows. We're seeing a breakout today above the weekly kickoff level. If this breakout is accepted, our next stop would be up to this possible trend line up here or this previous weekly kickoff level up here. 97.15, the new upside target, if we do accept above this weekly kickoff level here. 30-minute chart. And so here we go. Settlement here. Got a lot of longs in this market. I think our longs before the open came down and tested the weekly kickoff level here as well as the high from yesterday, but was resistance becomes support. It's going to be an interesting trading day if we can't close the gap in regular trading hours. I'm looking for this market to continue to move higher. We had 1100 in open interest yesterday, right up against this. We're above it now. If we accept above it, there's space up above for this market to continue to move higher. I did not mean to do that. All right, so we've got our feet ahead of us. Good to see a level 2. Life is busy. I don't know about any Black Friday sales, but we do have our holiday packages out. There's a link at the top of the chat, level 2, if you want to check that out. And level 2, don't forget, today is market therapy, so get to market therapy. The doctor does such a good job of speaking, and the subject this time is going to be how the meritocracy of trading affects your trading psychology. Looking forward to seeing you there. Yes, you're going to be joining the swing combine. The swing combine, Brian, is a combine where you're able to hold micros overnight. Just jumped in halfway sleeping. All right. I'm going to let everybody get down to business. Our equities are just opening up. You have a good trading day today. Looking forward to seeing everybody at the group coaching at 1 o'clock. If not, I'll hopefully see you at market therapy at 3:15. Busy day for us here today. Get out there and profit. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Looking forward to seeing everybody have a good day. Again, we'll see you at market therapy or group coaching. Get out there and profit. Have a great trading day. Trade well. We'll see you soon.